Hey guys, it's Dan here again. Welcome back to this channel. And in this week's video, we'll be looking back at one of the most important events in the financial world. It's one of the most scrutinized and anticipated events. The Berkshire Hathaway annual meeting was recently held on the 2nd of May. And in this video, I'll be sharing with you 3 key takeaways from this event. And I'm sure you guys will agree with me on this, that Warren Buffett is arguably the greatest investor we've seen in the modern era. And at the age of 89, he still gave a compelling speech and sat through another 2 hours worth of Q&A session. Wow, and those questions weren't easy to answer at all. I mean, that in itself is truly impressive. Just the stamina and the clarity in communicating his thoughts. And you know when this guy is talking, the whole world is listening. And this was the first time in Berkshire's history that this meeting was hosted virtually, with Warren Buffett sharing an empty arena with one of his potential successors, Greg Abel. Last year, the annual meeting attracted more than 40,000 people. And this time though, his right-hand man wasn't there either. There was no Charlie Munger, who is actually another 7 years older than him, at 96. One thing that hasn't changed though, is the cherry-flavoured Coke cans. And this is no surprise if you've been following him as an investor. You'll know that he is the biggest shareholder of Coca-Cola, having made his first purchase of Coca-Cola shares in 1988 and a couple more times a few years following that. His total cost basis added up to around 1.3 billion, roughly a 10% stake in the company. And this investment alone is now worth approximately $17 billion. During these 30 odd years, he had built Berkshire into a massive conglomerate, which is basically a company that has multiple businesses in a variety of industries. And Berkshire went from a book value of 4.9 billion in 1989 to 375 billion as of the first quarter this year. In the most recent Fortune 500 ranking, Berkshire was actually ranked 4th by total revenue at $247 billion. And just by the sheer size of this company, you can really tell how much publicity surrounds it. And the annual meeting this year was indeed like no other. The meeting opened with a history lesson on America, and I feel there is no other person more qualified than Warren Buffett as an investor to give a speech like that at this point in time, given his professional and life experiences. The first key takeaway I want to talk about is that the American magic or miracle has always prevailed, and it will do so again. We all know that America is now the worst hit by the whole global situation. Just thinking about the number of deaths, the doctors, health workers that have sacrificed their lives, and the people that have lost their jobs around the world. The unemployment rate now in America is over 14%. That equates to around 33 million people. That is almost the population of Canada. So just imagine 90% of the people in Canada are jobless. And if we compare historical unemployment rates, we'll discover this is actually the highest it's been in 70 years. So I think if you listened to how Warren Buffett spoke, you can really tell he's trying to instill confidence and comfort in people's minds again. He showed how much America grew in its 231 years of being a country, and he used a simple slide to convey just how young America still is. 231 years old compared to 185, which is his age and Charlie's age added together. It just shows how much life he and Charlie have lived through, the events they've been through, and what it really means to be living in 2020. Warren Buffett believes that if someone were to pick a time and a place to be born, it wouldn't be 1720, 1820, nor 1920, but today, and to be born in America. During the Great Depression, the Dow crashed by around 83%, and eventually it would take the market 20 years to recover this loss. If you had bought the Dow around the 1950s, you would have made $100 for every dollar you invested. And Warren Buffett said all you had to do was buy a cross-section of America. You didn't have to read the Wall Street Journal, you didn't need to look up price of stocks, and you didn't need much money at all. All you had to do was believe and have faith. But the important thing he reiterated was to never bet against America. The second takeaway is how he described the essence of investing. We don't know what the market will do tomorrow, but Warren Buffett said he knows America will move forward over time. And even if you were to make bets against America, you have to be very careful about how you do it. Warren Buffett then went on to make an analogy between investing in stocks and investing in a farm. So you buy a farm because you believe it has potential to grow, not because you feel you're pressured by this obliging neighbor, as Warren Buffett puts it, quoting prices to you, wanting to buy your farm or sell their farm to you every day. And yes, it would be good to have this kind of neighbor though, right? Because the prices won't be the same every day, and you could take advantage of that. So when they're selling low, you can decide whether to buy their farm, or when they're buying high, you can decide whether to sell yours. And this kind of situation is exactly like the stock market. The quotes that come out every day, or even every hour, minute, second, should appear to you as a big advantage. But there will be people trying to profit from you, telling you what the stock prices are going to be in a week's time, month's time, etc. So if you're buying in and selling out every day or every couple of days, are you really investing? Stocks may go down, but you have to ask yourself, has the business fundamentally changed? The third takeaway I want to share is that the world has changed for the airlines, and we don't know how it has changed. Berkshire's first ever airline investment was in US Airways back in 1989. And that didn't go well as the airline ran into a lot of problems. Though Berkshire recovered its investment in the end, but Warren Buffett regretted that investment very quickly. Fast forward by 20 years, in 2016, Berkshire took major stakes in 4 of America's major airlines, which amounted to around 7 or 8 billion in cost. This was actually a huge move, not only because of the dollar amount, but because Warren Buffett hasn't always been a fan of investing in airlines, as we now know. But before the airline industry was hit by the pandemic this year, his airline holdings actually grew to around $10 billion, looking very promising. Unfortunately, he made the call to sell them at around $6.5 billion because he believed the industry isn't going to be the same anymore. In his 2007 letter to the shareholders of Berkshire, he wrote that the worst sort of business is one that grows rapidly, requires significant capital to engender the growth, and then earns little or no money. Think airlines. And then in that second paragraph, said that the airline industry's demand for capital ever since the first flight has been insatiable. Investors have poured money into a bottomless pit, attracted by growth, when they should have been repelled by it. I just decided that I made a mistake, were Warren Buffett's exact words in the 2020 annual meeting, but he also highly complimented that the airlines were well managed and run. But now the airlines are having to suspend their dividend payouts and borrow massive amounts just to stay afloat. There was no way that anyone could have seen this coming, and that the airline industry would be hit in such a major way. So was it really his fault? As he seems to regard that as a mistake. So the question is, has the airline industry fundamentally changed? And this is a really tough question to answer, even for Warren Buffett, because no one knows when and how the airline industry will recover. Travel will eventually resume, but to what extent? And how many passengers can be flown at once are just some of the questions to be answered. And will profitability recover to pre-pandemic levels? I think is what he's really worried about. Just look at how many airlines have declared bankruptcy or needed the government to inject capital. One thing he knows is that their balance sheets will now be highly geared, on top of an already capital-intensive business. And I mean, what is he going to do with $6 billion invested in an industry which he is now uncertain of? And he's not getting any dividends from them. I think he'd be making a huge bet if he hadn't sold. And his decision-making process really ties in with the second point we talked about. To develop your own independent outlook, and don't be swayed by the people around you. For sure, there will be people who will disagree with Warren Buffett's decision, but that was after his own evaluation and what he was really comfortable doing. At the end of the day, you shouldn't be counting on someone else making the decisions for you. And if you're going to buy stocks, be prepared financially and psychologically, and expect to hold them for a considerable amount of time. be prepared that it may fall 50% or more and still be comfortable with that holding, because if you can't handle it psychologically, then you shouldn't be buying stocks at all. And the key thing is to do something you understand yourself. Otherwise, you're going to be easily affected by the next person you talk to. These are all Warren Buffett's advice, and I really encourage you to go back and watch certain parts of the meeting on YouTube. I'll post the link in the description below, and I'll also post the timestamps of where he talks a lot about investing. I hope you enjoyed this video and found it valuable. Thanks for watching and have a great day.